The market can't decide what it wants to do, and we're going to talk about where we think it's going now. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you are watching this on YouTube, do me a favor and get down there and you hit that like and subscribe button. Click the bell icon to get notified every time we upload a new webinar here on the channel, because you're not going to want to miss a single one of these, because we're giving you the information you're not going to hear anywhere else. So let's take a look at the S&P 500 and kind of figure out what happened this week. So obviously we had a huge run up last week, right? So the week prior, actually, we had this huge, just massive run up, like 5%. And we kind of cooled off a little bit here. Obviously, Powell was talking a couple times this week. A lot of Fed people were talking. Whether you put a lot of stock in that or not is totally up to you. But everything looked kind of like it was cooling off. And Thursday, we looked really red. Obviously, a big push down here back towards the 50 moving average. And then Friday happened, and the market just went absolutely nuts. Now, I will note, guys, that this line was here before the webinar started. We drew this line last week and we ran right up to our downward trending resistance area. Now, obviously, we had a pretty big breach, or not big, I would say pretty bullish breach rather, of the 4,400 level, but we did stop short of our trend line here. So it's going to be interesting on Monday to kind of see how things are going. Obviously, we're going into the Thanksgiving Day weekend, or week rather, here a week from this one. So we are approaching a holiday weekend. So it's going to be interesting to see. I keep saying weekend. It's not a weekend. I apologize for that. We are approaching a holiday here in about 2 weeks. So it will be interesting to see how the market behaves. But definitely a very bullish move on Friday, really just blowing out that other candle and really ending the week on a very green note. But will we see more downside? I think there is that potential. But if we have a very bullish breach of this resistance line, we could see the market run up some more. Obviously, we've been right here at 46 before earlier this year in July. That was the July high. And it's been kind of downhill from there. So we're going to have to see if we get this big, bounce off of this 4,100 level that we have. We blew through 42 and 43 like it wasn't even there. 44 was looking like it was going to give us pause, but we really just kind of blasted through it on Friday. We'll have to see if that continues into the week. Now, let's take a look here and see which sectors benefited the most, and shouldn't be much of a surprise, but we can continue to see tech and communications be the biggest benefactors of this market run-up. Now, I will say, we did see last week some run-up in these sectors that are really underperforming, but didn't get much of a bump on Friday with the market running up so high. Utilities, real estate, consumer staples, healthcare, energy, financials, all still below the zero line, even though the market is up almost 14% on the year. Now, the consumer discretionary, stocks, we're starting to see a little bit of a recovery there. But man, look at that jump in tech and communications. So that kind of really tells you where the money is going here in the S&P 500 right now. It's into these growth stocks, these tech stocks that have the higher, potential for bigger moves. And tech up. Oh, hang on. Let me get this on year to date. Apologies for that. Tech up 45% on the year. So I need to revise my previous statement saying the market was up under 14%. It's actually more, up over 14%. So I apologize for that. But yeah, tech and communications just going nuts here with that run up on Friday, while the other sectors really just kind of, hanging out, for lack of a better term. Let's take a look here at the asset classes. We'll start off with oil, and more of the same this week. Actually, we came down below $76 a barrel, though we did close on Friday right at $77.17 per barrel of light crude. So a little bit of a curl up on Friday, but nothing too interesting if you ask me. Now, obviously, we are going into the winter months. People are traveling less, but I will say the Thanksgiving holiday is the most traveled holiday in the world, at least here in the United States. So there's going to be a lot of air travel during that week. So that could be interesting to see. And kind of as we predicted here with gold, we saw this big run up to 2,000, had a nice rejection there, and we have dipped right back down kind of starting to come down. So definitely a lot of volatility in gold right now, a lot of fluctuations in the price, but we have not breached that all-time high of $2,050.17 per ounce. Now, I hear a lot of people saying, gold's going to the moon. Well, not after last week, if you ask me, because we seem to be coming back down to earth a little bit. Definitely not down here to this 1820 level that we hit earlier in October, but still quite the turnover, the rather parabolic move there. We came right up and then we came right back down. Let's take a look at the bond yields here and the U.S. dollar. Honestly, not too much to report here. We did see a bit of a curling up towards the end of the week here, especially with the 2-year bond yields. But for the most part, things kind of staying pretty much the same. If you want to hear Riz's analysis on this, make sure you check our elite webinar from last week. And the dollar is really just kind of holding here. So we had this, this big dip here in July, and it has been nothing but up until about early October. And now we're basically just consolidating. Just some movement sideways and, nothing too dramatic to discuss there. Obviously, we had a little bit of a dip here. Looks like on Friday of last week, and we just kind of crawled back up a little bit. So this to me is really just consolidation. So the dollar's holding strong. Obviously, lots of things going on in the Middle East. Oh, I almost forgot to mention. So this week we had Powell talk twice. And of course, earnings are over at this point. So for the most part, we're done. The hottest take from Powell this week was apparently there were some climate degenerates that crashed the party, and Powell didn't know that he was on a hot mic, and his direct quote, and I will somewhat abbreviate for YouTube here, was "just close the effing door." So very classy from the Fed chair. Really appreciate that from him. Definitely some really great insights into the economy there. Just close the effing door. Let's take a look at the big dates this week, and we've got some big ones. Obviously, the inflation rate on Tuesday is going to be massive. The core inflation and the inflation rate, both month on month and year on year, are going to be reported. There looks like that is a pretty big forecast of a drop of 0.4% on inflation rate year on year. That seems a little aggressive to me. I don't feel like that's really warranted, but we'll see. Obviously, the PPI, the producer price index, is going to be interesting on Wednesday, and the retail sales. Building permits, no one really cares about that. Let's just be honest. But yeah, Tuesday is going to be the big day this week with that inflation rate announcement. That will be big. So if there is a big discrepancy between the forecast and what it is, or rather, if there's a big move either direction, you could see that affect the market pretty dramatically, is the best way that I can describe it. So, if those numbers come in really good, that could be a good thing, meaning that inflation is going down. I'm not seeing that. If you ask me, I don't see anything in prices coming down, but I sure would like to, especially on groceries. I don't know about you, but I would love for my groceries not to be as inflated as much as they are right now. But yeah, if you see a much higher number, obviously that will negatively affect the market, because that could forecast more interest rate increases in the future. And the Fed has not ruled that out, from what I understand. Now, they haven't said specifically, yeah, we're going to do it, at the next meeting. But, if inflation doesn't start to contract and we have more, expansion of inflation, it gets higher, they got to do something. And interest rates are pretty much it. So those are the big ones this week. I did have a question from one of our elite members about the S&P 500. He said that he's stuck at work. No worries. I totally understand that. It happens. But he's kind of looking at the confirmation of the rejection of the 4,400 level, which we talked about earlier, and what our outlook is towards the end of the year. He says right now he's kind of waiting for an entry. Trust me, I think a lot of us are doing that. But obviously, if you got in on the dip buy list when Riz announced it here on the 27th, that would have been a good time to get in on that. But obviously now is not the time. So it's going to be interesting, here, especially around this 4,400 area. Obviously, we've been here before. We've had some respect of this area as far as, the larger trading people that can actually affect the market. I won't say it's the biggest support and resistance level, but it's definitely an area to keep an eye on. And we did have a rather bullish push through on Friday. Now, the market is somewhat forgetful of what happened the week before, so we're going to need to kind of stay forward looking here. But if we continue to see this run up here past 4,400, and we do have a very bullish move past there, that could be a good signal that the market wants to go up, and people are going more risk off moving into the holidays. Now, typically December is a slower month, and obviously we're only a couple weeks out from that. It's hard for me to say that, to be honest with all of you. But if we see a very strong push here through 44 and a continuation of what we saw on Friday going into Monday, that could be a big sign for you. Now, if we open up lower and we start dipping, that could be an issue too. Now, you may have heard that Moody's downgraded the U.S. economy. Big surprise, but I think everybody's kind of saying, and what is really my opinion as to that. But it could affect the market on Monday. We may see an open lower. Obviously, Riz will be keeping an eye on futures on Sunday night, but that could negatively affect it. But I don't think it's going to be too bad, honestly. I think with all of this kind of euphoria here going into the last couple weeks, that we could see some continuation higher. Now, I could be wrong. My line could be absolute gospel here, and we see a nice rejection and a push back towards the 200 simple moving average over the next couple of weeks. But with this market, it could be in 2 or 3 days. That's just my take on it. The market has been incredibly difficult to track this week. It has been very up and down. We've seen a lot of indecision, compared to the week prior. Going into Friday, we barely saw any movement. Yeah, we saw a little bit up, a little bit down, and we were basically right where we started, on Thursday or Wednesday, excuse me, going into Thursday. Thursday was a bit of a bleed, and then Friday was just like, oh, we're going to buy everything. So, it is a little tricky right now to trade. If you are feel frustrated right now, I don't blame you. I think the most important thing right now to consider is just being patient and not chasing. And I understand how difficult that is, especially after we had this move a couple weeks ago, and we had just this face-ripping rally, as Riz likes to call them, and then Friday was just nuts. But it's been very difficult for a lot of people to get their finger on the market this year. It's not as simple as it has been in the past. It's never been simple, let's be honest. But it has been more tricky this year. There's been a lot more up and down. There's been a lot of more intraday movement. And it can be very difficult to trade at times. And so my, advice is just to take a deep breath, relax. We have to get through this time period, and, we'll kind of see how things shake out. But I would just say, don't be too eager to jump into anything. There are still a lot of negative factors going on that the market doesn't seem to be pricing in, if you ask me. Obviously, there's the looming conflict in the Middle East. I don't care, who you side in that, but it's there, and that could obviously affect the market. There's a lot of instability here in the United States with, people with protesting, things like that, especially worldwide. There are a lot of protests going on right now in support of both sides of that conflict in the Middle East. So that is definitely something to keep an eye on, because if it gets hotter and we get more countries dogpiling in, that could definitely affect, economies around the world. Let's just put it that way. So I'm not saying that, oil is going to go to 150 or something like that. I mean, we even saw when the Ukrainian conflict got hot, the max we got to was about 123 per barrel. And then we came back down pretty sharply. So, everybody who says that, oil is going to go to $200-300 a barrel, they fail to understand the fact that the U.S. economy cannot function with oil prices that high. The economy is designed to function with oil prices around $60 to $80 a barrel, which, wow, would you look at that? That's exactly where we are right now. Funny how that works. So I would just say, keep an eye on things right now. Keep your ear to, the ground, and see what kind of shakes out in the Middle East, because I think that is the bigger catalyst. If something goes crazy there, definitely the market will react. So keep an eye on that here, because the more troops that get pushed there, the more likelihood there is that something may happen. So that, in my opinion, is the big catalyst. But of course, we've got interest rates, so everybody keeps an eye on that. But if they come in rather lukewarm, don't expect a huge move in the market that day. But if it's hot or cold either direction, then yeah, we could see some volatility. So I'm not seeing any other questions from our members here. As always, when I'm running the webinar, we get through this because I know your time is valuable and so is mine. So I really appreciate all of our elite members who came out tonight. Of course, I'll really appreciate all of you who watched the replay. Do make sure you hit that like and subscribe button on the way out, and we'll see you in the market on Monday.